Hello and welcome. You're tuned into Market Fatafat on ET Now. I'm Shrishti Sharma and with me today is Vinny Motiwala. And viewers, this is the show where in the next 1 hour, we're going to be highlighting all the buzzers in trade right now, and we'll also connect with the management of SJS Enterprise. But before that, let's mark the stellar recovery, Winnie, and the benchmark indices from the day's lowest point. For both the indices, very good move from the day's lowest point.
Absolutely. Very good move from the day's lowest point in terms of a recovery. Right now, yes, what we are seeing in terms of the Nifty, slight bit of a decline from the day's high, but still holding on to the green. And what a move, like 0.6%, from the day's lowest point. That's something that one should watch out for. 22,550 levels is what the Nifty is managing to hold on to. Bank Nifty, like my producer was just showing, that's the one that has recovered from the day's lowest point, but a slight bit still on the negative side. You know, it went up to the green and now again it saw a bit of a fall coming in. That's the Bank Nifty for y'all. Other than that, metals, they're shining bright. So something like a GSW Steel, SAIL, Hindalco, all of them are managing to hold on to the sheen and managing to hold on to gains. A lot of movers in trade that we have, Balkrishna Industries, ABFRL, BEL, that are managing to hold on to very, very strong gains. But let's talk about SJS Enterprises, Shrishti. That's the stock that is buzzing away in trade near its 52-week higher levels, 8% uptake. You know, FY24, overall the company managed to meet their guidance, and that's interesting. But what is the outlook of the company going forward? Because they've surely seen a very, very stellar performance. And given that the auto sector is doing well, is that something that will work out well? What are they envisaging there? We're joined by Sanjay Thapar, CEO and Executive Director at SJS Enterprises this afternoon. Very good afternoon to you, sir, and thank you so much for joining in with us on ET Now. I want to start with that FY24 guidance, right? In terms of revenues, you had spoken about a 45% revenue growth, 30% PAT growth. Clearly, you've achieved that guidance for FY24. And with this auto demand, robust demand from the auto sector, what are you envisaging for FY25? Where do we see the numbers headed?
At SGS, we see very strong growth moving forward as well. So what we guide the market is not in terms of percentages, but in terms of outperformance of the market. It's been 18 quarters that we've consecutively outperformed the automotive industry, both two-wheelers and four-wheelers put together. And we will continue to do that. So very strong margin profiles. It's a very profitable business that we have. And we intend to make sure that it grows very strongly in the future as well. So I would not give
very good.
Yeah, it's at least 1.5 times outperformance of the automotive industry on a whole.
All right. Very good afternoon, Mr. Thapar. This is Shrishti also joining in. But what we are seeing in the automotive industry is that a lot of companies are working on the premiumization. How are you riding the trend as per SJS Enterprise, as well as what are the product addition plans for FY25? Any specifics that you can tell us that within your product range, which category you are focusing in?
I think we are the champion of premiumization. That's the whole business that we have. So we add value, aesthetic value to products from SJS. The products that we have, which we are very excited about, is IML, IMD technologies that we added to our portfolio last year through the acquisition of a company called Walterpack India. We also have great potential for the cover glass business that we have. Cars in India are going to have more and more displays. And we are in a very strong position there. We have a great customer connect. We will see this traction happening as the market evolves and the consumer demands better and bigger display screens inside the car. So these are these two product segments that we see that will add to, will get traction moving forward. In addition, we have a chrome plating business and a painting business, which also is growing very strongly. So we see secular growth in all the about 14, 15 product categories that we have. So strong outlook.
Right. So, one more point I just want to talk about and circle back is in terms of the top line, right? When you look at it, top line in FY24, around 630 crores is what you have managed. Margins, that's seen a bit of a decline on a year-on-year basis when you're comparing in the last couple of years. So, in terms of top line, do you see this headed towards the 800, 900 crore mark in the next FY25? Could we expect that given the growth rate? And in terms of margins, what's the outlook?
I cannot give you guidance in specific numbers, but as I said, we expect the automotive industry to grow at 8 to 10%, and we will grow at least 1.5 times that. So you can do your own math. As far as the margins go, we acquired a company called Walter Pack India in July of this year, July of 23, sorry. And they had a little bit of a hiccup in the first quarter or the second quarter of this year because some programs got delayed. That has come back. So margins of Walter Pack, which were about 20% in FY23, Q3 FY23, have now gone to almost 25.5% for this last quarter. So that has come up, but the overall margin profile for Exotech has still to recover. We've accounted for only 9 months of that acquisition. So moving forward, we expect this margins to be stable at 25% overall for the consolidated SGS group.
All right, expect the margins to be stable at 25%. But since we're talking about your future outlook and the plans regarding that, so just wanted to know that what are the capex plans for FY25, as well as we see that the company has a reserve of around 52 crores in the cash reserves. So what are the plans to utilize the same as well?
So we intend to spend close to about 70 crores as capex for this current financial year. And out of that, almost 15 crores is going to be maintenance capex, and the balance is going to be growth capex. So we see good traction, as I said earlier, for cover glass business. So we're going to set up a plant specifically for cover glass. Plus, we are adding capacity in both the in-mold decoration businesses that we have and also the chrome plating business at Exotech. So to meet the customer requirements, that's the reason for these investments in the current year.
Okay, Mr. Thapar, thank you so much for joining in with us, talking to us about the outlook of the company going forward. That was the management of SJS Enterprises, expecting the growth to be better than what the industry is growing at 1.5 times better than the industry growth, auto industry growth. So yes, keeping an eye out on that, and margins remaining stable at 25%. That was SJS Enterprises. As of now, the stock is trading with gains of almost 8%. But which are the other movers in trade? Which are the other stocks that are in action today? To talk all about that, we do have Osho Krishan joining in with us on the technicals, while from the research team. Okay, we're actually going to, slip into a break, but after that, we'll connect with Osho Krishan as well as the research team.
Welcome back to Market Fatafat, a show where we highlight all the buzzers in trade as of now. And with this, let me welcome on board a team of researchers as well as a technical expert for today. On the technical side, Osho Krishan of Angel One is joining us right now, as well as on the research side, Ankita as well as Snehi are with us. A very good afternoon to all three of you, and let's get started highlighting in the first counter, Winnie, that we're going to be highlighting is Sun Pharma. Pharma major slated to report its numbers tomorrow, and just a while back in the last 10-15 minutes or so, we have seen a good jump on Sun Pharma as well, holding gains of 1.5%. And in the earnings, we are expecting this to be a decent set of numbers for Sun Pharma. Why? So because their specialty sales is expected to do better. Once again, for the company, the US sales is expected to see a jump of 16% on a YOY basis, while for the domestic side, we are expecting a growth of 10% on a YOY basis. And just yesterday, we have seen numbers of Taro also trickling in, and that's a wholly owned subsidiary of Sun Pharma now, and the numbers were really great and even better than what the street was estimating in. Talking about the numbers, on the revenue front, 12,522 crores is what we are expecting. Profit expected at 2,602 crores, and the margins expected to be almost flattish on a YOY basis at 26%. Other than that, EBITDA is expected at 3,240 crores. So all in all, a decent set expected from Sun Pharma. Let's see how the stock reacts.
Okay, surely buzzing away in trade ahead of its numbers tomorrow, but keeping an eye on that. Let's not forget to the next stock, Adani Ports. That's the one that's buzzing away in trade today as well. And in the last 6 months, 72% return Osho is the stock has managed to give. What is the outlook now on Adani Ports at 1,382? Is it still a buy?
Very good afternoon to all of you. Well, looking at the technical developments of Adani Group companies, they are having a very strong resurgence in the last 2 to 3 couple of trading sessions. Specifically, Adani Ports have seen a very strong up move in the last two sessions, but overall, if I see the cycle of this counter, then it has been on the cycle of higher highs, higher lows. And now with the development in the last two sessions, I am expecting that it is on the verge of giving a breakout around the zone of 1380 to 1400, which is the immediate resistance for this counter. The time it surpasses the zone of 1380 to 1400, then from here onwards, we can see a very strong upsurge in this counter for a higher targets of nearly 1450 to 1460 on a very short-term perspective. So one should definitely try to gauge momentum in the Adani group companies, specifically Adani Ports.
Okay, that is Adani Ports. Keeping an eye out on that. Thumbs up coming in from Osho. But let's move on. Talk about IEX. That's the stock that is in focus today. We have a couple of brokerage notes here. The first one is from Investec, where they've upgraded the stock to a buy from a previous hold rating and to hike the target price to 171 rupees per share from previous target price of 135 rupees per share. They're saying that the valuation price in risk is of the market coupling, better profitability outlook is there for FY25 from the company, as well as market coupling implementation faces delays. So thus expected to sustain the market share is what the word is coming in from Investec on IEX. Even when you look at Axis Capital, they've upgraded IEX to an add from a previous sell rating, revised the target price to 170 rupees per share. The previous target price was 112 rupees per share. So they expect that IEX expects its trade electricity volume to surpass a 20% growth. Rise in terms of the share for exchanges in terms of power market is something that could support the growth, and keeping an eye out on market coupling unlike in the next 2 years. So yes, that's the word coming in from both the brokerages on IEX, and stock is holding on to gains of 2.15% as of now.
Well, yes, Winnie, the stock is in focus today. In the past couple of days as well, we have seen good momentum. And Osho, this is what you're tracking on the technicals as well, right? Tell us more about IEX, where this counter is headed now.
See, overall, this counter has given a breakout in the last month on April 25th, but it does not able to sustain around the zone of 155, 160 odd levels, and again have seen a decent correction. But again, in the last 3 trading sessions, we have seen a very strong resurgence in this counter, which has, on technical perspective, have given a V-shaped recovery, which itself is a very strong recovery on the technical development. So I'm expecting that with the recent move, I am expecting on the higher end, 175 to 180 should be seen in a very short-term time frame. So definitely one should try to gauge the momentum in IEX for short to medium-term perspective.
Okay. Keep an eye out on IEX. As of now, managing to hold on to 161 rupees per share is what IEX is trading at. Let's move on and see RVNL. That's the stock that is again in focus today, and not an earnings candidate, but an order candidate is what we should say for RVNL always.
Absolutely, Winnie, spot on. It's on the back of an order win. Stock is holding up pretty well as we speak, up almost 14%. Now, RVNL has bagged an order from the Southeastern Railway. The company has received letter of acceptance from the SCRHQ Electricals Southeastern Railway for the designing, supply, testing and commissioning for upgradation of electrical traction system for the Kharagpur division of the Southeastern Railway to meet its 3,000 metric ton loading target. Now, the order is worth 148 crore rupees and is expected to be completed in the next 18 months. So on the back of this order win worth 148 crore rupees, stock is doing pretty well, up 14%, positive news flow, so 14% higher is where the stock is at.
All right, that's about RVNL. But moving on, let's talk about India Cements then. And Ankita, this is your first stock. Tell us what's happening here.
Well, yes, India Cements is an earnings candidate, and as you can see, there's a knock coming in on the stock, down with a percent and more. But despite reporting a narrowed consolidated net loss of 50 crore rupees, which was helped by improved sales volumes, as compared to last year on a year-on-year basis, they had incurred a loss of 243 crores. So it has come down drastically. But on a sequential basis, if you look at the numbers, they don't look very good. The net loss came in at 50 crores versus 7 crores. On a quarter-on-quarter basis. The net revenues came in at 1,267 crores. That saw an uptick of 10% on a sequential basis, but the EBITDA was down and out 23%, and the margins also came in at 3%, which is a downtick of 103 basis points on a sequential basis. Now, the company says that with the increased and the improved sales volume, India Cement could turn out to have a better operating performance and pare the losses for the fourth quarter, which is under review. Also, they feel that after the muted capacity utilization in the previous 2 quarters caused by stressed working capital conditions, the same could be improved in the fourth quarter due to the infusion of working capital. So that's the word coming in from the management. But for now, India Cements is down and out more than 1%.
Okay, let's move on and talk about MTAR Tech then. And Osho, what's the view coming for MTAR Tech in terms of the charts? What we're seeing for MTAR Tech is that in the last 6 months, a bit of a correction has come in. Is it the right time to start entering MTAR Tech again?
See, overall in this current financial year, the counter have started regaining some kind of strength from the lower levels. Overall, the counter was into a corrective phase, but looking at the recent development in the current financial year, the counter looks very promising. On the technical developments, it has seen a symmetrical triangle breakout. So from here onwards, I am expecting that it has a very strong upsurge or higher targets near the zone of 2250, 2300 on a very short-term perspective. But on a longer duration or a higher duration, one can definitely expect a very strong reversal in this counter. So for short-term traders and even for long-term investors, both can have a look on MTAR Technologies for a decent gain over a period of time.
All right, that's about MTAR Tech. But Winnie, let's talk about BEL and Whirlpool then.
Absolutely. First, let's just talk about BEL, right? BEL is the stock that has reported a very good set of numbers this time. Strong numbers that came in from BEL. And what we're seeing is that the revenue saw a growth of around 32.1%. EBITDA performance has been a beat from what the street was expecting, as well as in terms of the profit of the company also beating the street estimates. Order inflows for FY24 stood at around 35,400 crores. And overall, the strong backlog that is there of around 75,900 crores provides a visibility going forward in terms of the revenue potential that they have. That's for BEL. So yes, a strong number coming in from BEL, and FY24 in terms of the margin guidance also, they beat that margin guidance like I was mentioning from what the company had mentioned as well. Let's move on, talk about Whirlpool. Whirlpool, this one also was a strong set of numbers, though given up from those morning gains that we're seeing for Whirlpool. And overall, the revenue saw growth was muted, soft at 3.7%, but margins is where we saw sharp improvement, as well as the profitability of the company that also saw a very sharp improvement. So yes, Whirlpool a bit subdued on trade, almost flattish right now, but from the day's highest point, it's given up those gains.
All right, those were the earning candidates. We're moving on. Snehi, take us through what's happening with Honda India Power then.
Well, absolutely. This stock is buzzing on the back of its earnings and poor set of numbers coming in this time, and that's being reflected by the how the stock is acting right now. Quarter 4 revenue has come in at 231 crores versus 313 crores this time last year, which is a fall of 26% on a year-on-year basis. EBITDA has also shrunk at 11 crores versus 27 crores, which is a downtick of 61%. PAT, however, has seen an uptick at 15.8 crores versus 5.8 crores this time last year, which is a good hike of 172%. But on the other hand, you have EBITDA margin also that has seen some shrinkage coming over there at 4.6% versus 8.8%, which is down 417 bips on a year-on-year basis. The company has also declared a final dividend of 17.5 rupees per equity share, but on the back of a rather poor set of numbers coming in where revenue and EBITDA margins have shrunk, the stock is not doing very well as of now. 11.2% lower is where the stock is.
Okay, let's move on and talk about Windlass Biotech as the next stock. And Ankita, is this also an earnings candidate?
Yes, Winnie, Windlass Biotech is an earnings candidate, and just look at the price movement that's coming in on Windlass. It's up 11%, actually more than 11%, almost 12% in trade today on a strong set of results that this company has posted. Let me take you through the results then. It saw an uptick of 21% on a year-on-year basis on the revenue front, coming in at 171 crores. Also, the net profit saw an uptick of a good 48.5%, coming in at 17 crores. The EBITDA also saw an uptick of 34% on a year-on-year basis, and the margins also saw an expansion of 118 basis points, coming in at 12.9% on a year-on-year basis. Also, the net sales saw a surge of 21% at 171 crores versus 140 crores on a year-on-year basis. And the board has also recommended a dividend of 5.5 rupees per equity share. Strong set of results coming in for Windlass, and you can see the movement on the stock price trading with gains of 12% in trade right now.
All right, that's about Windlass Biotech. But keeping with the pharma space then, and just ahead of the earnings, Osho Aurobindo Pharma is showing good moves. Take us through what's happening on the technical front.
See, overall on technical developments, Oro Pharma has seen a very stiff resistance near the zone of 1160, 1170 odd levels. But in the last 2 trading sessions, there has been a very strong upsurge in this counter. So I'm expecting that from here onwards, 1180, 1170 should be acting as a very strong support zone, and the counter is poised enough to have a very higher targets of nearly 1240, the first target, which is for the short-term perspective, but ahead at 1260 to 1270 can be seen for short-term perspective. So there can be some higher highs, higher lows formation that can be seen, and dips are likely to augur well for the buyer. So 1180 is the support zone, and 1240 followed by 1260 should be seen as the target for short-term traders.
All right, that's about all in the pharma, but yet again another pharma counter that is in focus is Biocon, because today what we have heard from the company is that Biocon Biologics actually has got an approval for one of their key drugs from US FDA, that is biosimilar Eflibacet, which is used in treatment of ophthalmology. What the company is saying that in the US, the sales of this particular drug is $5.89 billion in 2023, and the analysts do believe that though it is a good approval that the company has gotten, but the launch could be delayed to FY27 and 28 then, so it will require a couple of years for the launch to happen in US. But other than that, the peak revenue potential from this particular drug is of around $100 million, but that could be realized in FY30. So indeed a good news coming in for Biocon, and hence we are seeing the stock is also holding on to the gains of 1.5%.
That's Biocon for y'all. Let's move on to stock number 12 for today. Osho, you've picked out Finolex Industries for us. You know, this one is trading almost near its 52-week high levels. What's the outlook that you have for Finolex Industries at 300? What should one do? Maybe start booking some bit of a profit or hold on to it?
See, overall, as we have mentioned, the counter is already in a very strong higher zone at near its lifetime high zones, but overall expecting the trend that it should be continued. So on the higher end, I am expecting that 320, 330 should be retested for this counter. So it still has a ample amount of approximately 10 to 12% of higher targets for short-term perspective. So from here onwards, one should definitely try to gauge momentum, while on the downside, 280 followed by 270 should be seen as a strong support zone. So if there will be any dip towards 280, that should be augured well for the buyers for immediate target of 330 in the near term.
Finolex Industries looking decent, but with the stop loss, and recommendation is to buy on dips. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back with more stocks in Market Fatafat.
If you like this video, then like, share and subscribe to ET Now.